In the U.S., stock index futures posted minor gains ahead of Thursday's open. Around 5:30 a.m. Eastern Time, Dow futures rose 18 points, indicating an uptick of 23.55 points at the open. The Nasdaq and the S&P 500 futures also indicated a slightly positive start to Thursday's session for their respective markets. The move in pre-market trade come after Wall Street finished its previous session deep in the red. On Wednesday, the Dow Jones Industrial Average slipped more than 200 points after President Donald Trump taunted Russia with the threat of imminent military action in Syria. While political tensions between the U.S. and other nations continue to rattle sentiment, the U.S. administration isn't the only topic keeping Wall Street preoccupied. On Wednesday, Facebook CEO Mark Zuckerberg testified for the second time this week, this time in front of the House Energy and Commerce Committee, where he was questioned upon topics such as the guiding principles and legal obligations of the company. On the data front, Thursday, jobless claims are due out at 8:30 a.m. Eastern Time, along with import and prices. And a quick look at Asian market stocks closed lower today as investor confidence seen earlier in the week wavered overnight amid geopolitical tensions. The Nikkei 225 eased 0.12%. In South Korea, the Kospi gave up gains in late session, slipping 0.86%. In Australia, the ASX 200 closed lower by 0.23%. Hong Kong's Hang Seng Index suffered early gains to edge down by 0.74%. Markets on the mainland, meanwhile, closed in negative territory. And now we'll look at the global oil market. On our commodities market update, markets remain tense today on concerns over a military escalation in Syria, although prices remain some way off Wednesday's highs since late 2014 as bulging American supplies weighed. Brent crude futures were at $72.14 per barrel, up 8 cents from their last close. U.S. West Texas Intermediate crude futures were at $67.03 a barrel, up 21 cents. Our Desola Sumoni, research analyst with Financial Derivatives Company, joins me now to talk more about the global oil market. Hello, Desola. Thank you very much for joining us.
Hello, Kimberly. Thank you for having me.
Now, we've seen the price of oil rise to a 3-year high of about $72 per barrel, driven by tensions in the Middle East. What other factors are influencing prices, and is this new price sustainable?
Thank you for that question. Like you said, the major factor driving oil prices are geopolitical tensions in the Middle East, the Russia, Syria, and United States conflicts. The possibility that the U.S. might impose sanctions on Iran, as well as the civil war in Yemen that threatens to become a regional war. So those major factors are driving oil prices. But apart from that, there are other non-geopolitical conflict factors that are driving prices. For instance, the OPEC compliance deal. Data from the OPEC, monthly data from the OPEC showed that last month that the output dropped by the most in a year. Output dropped by about 201.4 thousand barrels a day, bringing the total OPEC output to about 31.9 million barrels a day. Apart from that, we also have declining oil production in Venezuela. As of March 2018, oil production in Venezuela declined about 100,000 barrels a day, which is also reducing global output. We also have the weaker U.S. dollar. Week to date, the U.S. dollar has declined by 0.2%, which makes it cheaper for holders of foreign currencies to buy oil. So those factors, these non-oil factors, geopolitical factors, are also supporting prices in the near term. I think that the price effect of these geopolitical tensions is temporary. I don't think it's going to last. I think that in the next couple of weeks or days, we're going to have fluctuations in prices. So I think that this is just a temporary price effect and to pay the risk.
Okay, so what does this mean for Nigeria, and where do you see oil price this quarter?
For Nigeria, I mean, higher oil prices is always good for oil exporting countries. For Nigeria, we are seeing the effect of higher oil prices. I'm of the view that the higher oil prices is one of the factors that helped Nigeria out of the recession. we've seen the effect in our external reserves. So the external reserves are about 40-something billion dollars now, and they are projected to reach $50 billion by the end of the year. We've seen the effect also in inflation. If you look at the inflation and exchange rates figures, you will notice a positive correlation between two of them. As the exchange rate was becoming more stable, we also saw inflation declining at the same time. So we've also seen it in our exchange rates. We've seen it in our government revenue. If this continues, then we might see FAAC also increase.
All right, thank you very much for your time. Desola Sumoni is one of the research analysts with Financial Derivatives Company.